Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. We head into the final week of the northern holiday season, with financial markets reacting to tough news on multiple fronts. US missteps are catching up with them, and that is driving higher interest rates and a lower US dollar, both which involve an economic squeeze. Then there is the collapse of the US-Canada trade relations, which has pushed Canada to matching the US tariffs, and this will hurt both countries, Canada as expected, but the US more than they realise. Carney has brought back the Trudeau response, and this time Canadians have rallied around that reaction. Some significant parts of the US are going to get much higher prices. And as Canada supplies most of its imported oil and gas, if Canada adds tariffs there, the impact on the US will be magnified. All this will be grist for the Jackson Hole Symposium, which will be on from Friday to Sunday. There will be some worried central bankers showing up, and that probably includes Kevin Warsh, likely feeling undermined by Scott Bessent. And the outlook on global interest rates and long-term sovereign yields will again be a key focus this week as investors grapple with rising energy prices, increasing deficit spending, and soaring corporate debt. In the US, it'll be all about personal income and spending, PCE inflation, and durable goods data for July, in addition to the key annual revision to nonfarm payrolls. Japan will release consumer confidence survey results and its jobless rate, while rate decisions are due in Korea and Thailand, which are widely expected to keep their policy rates unchanged at 1% and 2.75% respectively, while the Philippine Central Bank could deliver a 25 basis point rate hike to 5% as the country continues to face elevated energy and food prices, along with recent wage increases. Locally, it will be all about the second quarter retail trade outcomes and current employment indicators, some mortgage and KiwiSaver data, and the week will end with the June update to the RBNZ's dashboard. In Australia, investors will watch July inflation data, where an easing from 3.8% to 3.2% is expected. And second quarter capital expenditure and household spending figures will also drop this week there. In China, investors will focus on the National People's Congress Standing Committee meeting in Beijing from August the 25th to the 28th, where authorities could signal additional policy support following a string of weak economic data. They will also release July industrial profits results. Over the weekend, China reported $11.1 billion in foreign direct investment, which itself was half the $22.8 billion in July 2025. Year to date, their foreign direct investment is running 8.8% lower than the same period a year ago. And also over the weekend, China said its forklift sales are going gangbusters in 2026, both for internal use and for export. CPI inflation rose to 1.9% in Japan in July, their highest since December 2025. Food prices were up 3.5%. While the headline rate and the core rate both remain below the Bank of Japan's 2% inflation target, the rising trend may be enough for them to raise their policy rate from 1% at the next review on September the 18th. They have other reasons to raise their policy rate, like defending the yen, yielding to the US, and needing to get back to normal at some stage. So this may swing it. Japanese business activity is expanding at its quickest pace in 6 months in August, according to the flash PMI data released on Saturday. There were good gains for the factory sector, and these were bolstered by modest gains in their services sector. Of note was a steeper rise in new orders. Cost pressures continue to ease from June's recent record, but remain sharp overall, leading to another near-record increase in selling prices. Businesses are finding they can pass on the extra costs. The flash August PMIs for India now show rising activity, especially in their services sector. In the US, the August flash PMI survey from S&P Global shows factory activity easing and now at a 5-month low. But the services sector is rising with a marginally stronger expansion. Input cost pressures have remained elevated, but mainly due to rising fuel prices. Diesel is up 8.4% from a month ago. Petrol is up 2.2%. Consumer price inflation is biting harder now in the US. Trump announced he will temporarily ease beef tariffs to lower prices. Local beef producers weren't impressed, warning that the move could hurt efforts to rebuild herds. And industry observers say the move will have little effect on high prices. For someone who claims to love free market capitalism, he acts in a very interventionist, the government knows best manner. Canada posted a good retail increase for the year to June, up 5.2%, although this was a slowing from May. But the July result looks like it will fade somewhat. The weekend USMCA trade deal failure won't help, of course. The EU Consumer Sentiment Survey retained its July improvement in August. It is still deeply negative, but less so than at any time since February. And the ECB updated its inflation expectations survey for July, and that shows a minor decrease to 2.9% over the next 12 months, from 3% in June. Eurozone business activity continues to rise in August amid stronger manufacturing growth, with their factory PMI now at a 51-month high. According to the S&P Global Flash PMIs for August, growth in Australia's private sector is softer this month as the cost environment becomes more challenging in both the factory and services sectors. But both are still expanding. They are still getting rising new orders in both sectors, but cost pressures have picked up in August. However, the ability to pass on those extra costs retreated to its weakest of 2026. And in freight news, El Niño is having an impact on Panama Canal traffic volumes. The authority which runs it says it's reducing traffic levels to 32 ships per day from the current 36 due to the low water levels. That is an 11% reduction. The US Treasury 10-year yield is now just on 4.74%, unchanged from Saturday, but up 5 basis points for the week. And the price of gold is soft, now at $4,607 an ounce, down $14 from Saturday at this time, but up $230 or 5.5% for the week. Silver has dipped 50 cents to just over $69 an ounce. Oil prices are unchanged from Saturday at just over $87 a barrel in the US, while the international Brent price is still just under $94.50 a barrel. From a week ago, these prices are 7% higher from then. And the Kiwi dollar is little changed from Saturday at just over 59.8 US cents, up 90 basis points for the week though. Against the Aussie, we're still at 83.4 Australian cents. Against the euro, we're holding at 51.2 euro cents. That all means our trade-weighted index starts today at just over 63.2, down marginally from Saturday on a yen shift, but up 80 basis points from this time last week. And the Bitcoin price starts today at $77,147, down a minus 0.3% from Saturday, but up a whopping 23% from last week at this time. Volatility over the past 24 hours has also been modest at just on plus or minus 1.2%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.